morning, good morning, good morning, good morning. Guys, let's double tap the screen. Good morning, let's double tap the screen. So I'm about to go live on YouTube now. I'm about to go live on YouTube now. Okay, I think we are live on YouTube. We are live on YouTube. Guys, let's share the live. Let's share the live. Those who are on YouTube, share the live on YouTube. Share the live on YouTube. Share the live. Let me see what's here. Okay. Good morning, Terence. Wesley, I see you. Happy New Year. Guys, let's double tap the live. Let's double tap the live. I don't know if I'm going to put like my phone here so that I do some TikTok and see the breakdown. But I think you can basically just, it's really not going to be clear. If you're on TikTok and you want to join the breakdown, just go on YouTube. Just search us on YouTube and follow on YouTube. Because you see that it's not really going to be clear. What I'm doing will not be clear. So you gotta join us on YouTube. I have just 4 people on YouTube. When it gets to 10 people on YouTube, I'm going to start working with them. Ostambi, good morning. What's good? What's the difference between a demo account and a real account? A demo account is used for practice. A demo account is used for practice. A real account is when you put your money in. Some person played me a fast one yesterday using your account. No, using a fake account with my name, not my account. This is my account. Guys, let's join the live. I'm live on Kick. I'm live on YouTube. I'm live on Facebook. And let me also add Instagram. Go live. Yeah, and I'm also live on Instagram. Can I deposit with mobile money? Yeah, you can deposit with mobile money. In your live account, you can deposit with mobile money. With Xnet, if you're using Xnet. If you're using Xnet, yep, you can pull through. Guys, I want us to do chart breakdown. I want us to do chart breakdown. I want us to do chart breakdown. So join us on YouTube. You can join us on YouTube or on Kick. You can join us on YouTube or on Kick, even Facebook, and I think Instagram too is live now. Yep, Instagram is live. I see my Instagram people. Guys, those on Instagram, I hope you can hear me clearly. Which pair should we analyze? Which pair should we analyze? Which pair should we start with? Start with Euro USD. Guys, hold on. Let me just share the link of the class to the Telegram. We are just starting, and I did not announce that we're going to have a class, so that's why there are just very few people because it was not announced. Okay, we should analyze gold. We are going to analyze gold. We are going to analyze Euro USD. We will analyze gold. We will analyze Euro USD. If you're on TikTok, you can join us live on YouTube. If you're on TikTok, you can join us live on YouTube. Wow. This is nice. Okay, guys, we're going to start our chat breakdown. We're going to start our chat breakdown. Those are on TikTok. Those are on TikTok. You can join us on YouTube. Come, I don't drop. Okay, guys. So we are going to look at gold, and we are also going to look at Euro USD. Uh, we're going to look at gold and we'll look at Euro USD. The taxpayer card for my personal taxpayer card or the one for the academy. This is what we are looking at on gold. This is what we have on the 15 minutes on gold. This is what we have on the 1 hour. Pure uptrend. This is what we have on the 4 hours. I feel like gold is going to drop drastically. It's going to drop drastically then before it continues the buy for the year. But before that, it's going to drop because it has reached 5,000. It's going to go to 6,000. But before gold goes to 6,000, it's going to drop. Before gold goes to 6,000, it's going to drop. Piero, thanks for the follow. Hello, Emelda. Those who are on YouTube, drop some fire. Let me see those who are on YouTube. Is there anybody on Kick? I just created the Kick account. It's still very new. But yeah, let's utilize that. Since I'm able to go live on all the platforms at once, I'm actually live on Facebook now. I'm live on YouTube. I'm live on Twitch. I'm live on Instagram. I'm live on Kick because I'm using a streaming platform. Let me see what Twitch look like. View on Twitch. Yeah, and all of them are looking very proper. All is looking proper. Those are for the Twitch and the Kick, the streaming platforms. We are still completely new there, but it's it's proper. Just being there live, even if there's nobody there, while we are also live on YouTube. Nice. Okay, but for now we're focusing on YouTube, guys. So if you're on TikTok, join us on YouTube. Join us on YouTube. Join us on YouTube. Join us on YouTube. Yes, that document should be the taxpayer card. Ask that guy. Ask that guy. Ask that tax guy. But yeah, it should be somewhere in the office. Okay, those who are on YouTube, I see you guys. See you guys. See you guys. So let's have our chart breakdown. Let's see what we have for gold and Euro USD. Right, we're going to analyze gold and we're going to analyze Euro USD. I don't like this format. It's to be green. I want to see my candlesticks the way they have to be. The green are for the buys and the red are for the Number one with pure black. Season break. Okay, so to analyze gold, let me see how many people. Okay, we have 17 people here. Okay, to analyze gold, we are going to analyze gold, we are going to analyze Euro USD and probably other pairs. Right? Now, if we look at gold, gold has been on an uptrend. No doubt about that. Gold has been on a massive uptrend. Right? Now, when the market is on an uptrend or when the market is on a downtrend, what do? You trade with the trend. Can't see your chart. Those who are on that comment is coming from from YouTube. Can you see my chart? If you're on YouTube, those who are on YouTube, can you see my chart? Okay. So now, like I was saying, right? If you look at the chart, you're going to see that we have gold on a massive uptrend. Gold has been on an uptrend since last year. You should have predicted last year that gold was going to be on an uptrend last year. But trust me, as none other up to now, 2026, we'll still be facing this uptrend, right? So when the market is on an uptrend, we look for buy opportunities. That does not mean that okay, there's not going to be a time where we can look for sell or where we can have a sell. But you just have to have it in mind that okay, if you're going to have a sell, the sell is going to be a pullback. Most of the time you're going to be buying, and when you're trading with the trend. Like the river is going down. When you're sailing down with the river, it's smooth. But if you try to sail against the river, it becomes difficult. You can sail for a short period of time, but you get tired, then you continue going back down. So that's what's happening on gold now, on an uptrend. So if you're looking for buy opportunities, you're going to have good buy opportunities because you're trading with the trend. But if you want to trade against the trend, you might have some good sales, but having in mind that those sales are just temporal pullbacks. Those sales are just temporal pullback. Now, let's look at gold. We are going to start from the higher time frame. I would like to look at the chart from the higher time frame to see what is happening. So if you do not know the trend of the market, you're going to go to the higher time frame. You use your trend line, which I believe you should know how to use trend line. If you don't know how to use trend line, then you just need to get access to the course. Or probably you have gotten access to the course, but you have not gone through it all. There's a full course on trend line breakout. You go there, you learn that, right? So now you see that the trend of the market is on an uptrend. It breaks, goes up, come down, retests on the trend, goes up, come back, pull back, goes up, come back, pull back. So if you're looking for a sell, you're going to see that you're mostly going to have these short pullbacks, these short sell pullbacks. You're going to have these short sell pullbacks. But majority of the time, the market is shooting to the upside. If people on TikTok, you cannot relate because you are not seeing what I'm showing here. even at this, it's still not going to be clear. So all you have to do is just join us on YouTube. Join on YouTube. Search FN-FOREX Academy on YouTube and join us. Let me try to see if I can figure out something for those who are on TikTok. They're not missing out. Hi Nelly. Okay, at least those who come on TikTok, they can at least be able to see what I'm doing here. Okay. So like I was saying, right? You always look at the trend first. So now we're looking at the trend on gold. You see that the trend is on an uptrend, right? The trend is on an uptrend. After looking at the trend, I want to mark key levels in the market, right? I want to mark key levels. Now, these key levels are levels where the market has expected 2 or more times. As long as the market respects these levels 2 or more times, it is a key level, right? As long as the market respects that level 2 or more times, it's a key level. So now, looking at the chart, you observing, can you see a key level? That's levels where the market has respected 2 or more times. Just look at the chart. Trading is more of observing. You observe and take action. Observe and take action. Look at the chart. This is a chart on gold, right? We're analyzing gold. Can you see levels where the market has respected 2 or more times? Now when you look at the levels and you get to see the levels, what do? You mark those levels with your horizontal line. For example, I want to mark this level down here. The market has respected here, gone up. I want to mark another horizontal key level around here. The market has respected this level many times, then break to and go up with a big gap, right? Now we go up again. Which other level can we see? I see another level right here. Another level here. The market come up, break, come back, retest this level. It's also a level where it meets with the trend line. You see that? Why is this line blue? I don't like this kind of color. Okay, we go again for another key level up here. The market came up, rejected this level, went back down, then break this level, retested this level. What happened in that position? Resistance level break becomes support. So you break this level, go up, come back to retest that level. That's a confirmation that it's going to continue going up. We have another level again where here, that's another level. The market break goes up, come back, respect that level. And right now, this is where the market is at. So trust me, if the market breaks this level, gold is pushing to the next psychological level, maybe 5,200 or maybe 5,400 or maybe 5,500. But if gold breaks this level up here, then we are pushing to the upside. For now, looking at buying gold is very okay, but it's also not the best decision. It's also not the best decision to make, so you have to be very guided. Because gold might consolidate here for some time, then go back down before coming back to break now this key psychological level. This is psychological level, around psychological level 5,000. So gold bid on 5,000 now, it's around psychological level. You cannot just break that level like that, right? You have to consolidate on that level for some time, maybe reject back to the downside, gain strength, gain liquidity before you actually push this to the upside. Before we can see some bulls coming in. So now that we have done the top-down analysis, we have understood the trend of the market on an uptrend. We have marked our key levels on the 4 hours. We go to the 1 hour. On the 1 hour time frame now, I always say between the 1 hour and the 15-minute time frame, that's where you look to get entries, right? That's where you look to get some your entries between the 1 hour and the 15 minutes. You look to get to your entries. So, looking at the 1 hour time frame now, looking at the 1 hour time frame now, the uptrend is still very clear. Now, if you're using the XNET terminal, you're going to see that we have these zones. These zones with red. You might be asking yourself, what are these zones? These are zones for news events. These are zones where we have some high impact news events. You get, and during those high impact news events, XNET always reduce their leverage to avoid over risking for regulations. Okay, so on the 1 hour time frame now, between the 1 hour and 15-minute time frame is where I always look to get my entry. Now, whose entries am I getting on the 1 hour to the 15-minute? What am I looking at? I'm looking at the key levels. Where is the market at this point? What is the reaction of the market at this point? What candlestick are we having at this particular point? Is it on a key support level? Is it on a key resistance level? Is it on a key trend line? And if it is on a key support or key resistance or key trend line, what type of candlesticks are we having? Right? Is it rejecting candlesticks? Is the candlestick having a high momentum? Is it a high bullish candle? Is it a high bearish candle? Are there consolidation rejection candlesticks? Those are we are looking at on the 1 hour. We are trying to get that confirmation if we are actually going to maybe buy or if we are actually going to sell. When we get that confirmation of okay, we'll buy or we'll sell, we are going to go down to the 15 minutes to get our entry. Right? We are going to go down to the 15 minutes to get our entry. Because on the 15 minute, we are going to be looking at where to place our stop loss, where to place our take profit, right? Sometimes on the 1 hour or on a higher time frame, when you're trying to place your take profit or your stop loss, you discover that if you place your take profit or your stop loss on the higher time frame, at the end of the day, your stop loss is going to be too big because you're looking at it on the higher time frame. So that's why we always go down to the 15 minute to actually get that entry. But confirmation, especially candlestick confirmations, I highly recommend the 1 hour because it's solid. If you go down too much to get your candlestick confirmations, it becomes a problem. So right now, gold is on this key level here. Gold is on a key level. It's on a round psychological level. That's a key level right there. Now, our reaction towards this particular position now, we go down to the 15 minutes. Before going down to the 15 minute, even we need to look at, okay, we mark these key levels on the 4 hours. Are there any key levels on the 1 hour that we could not see on the 4 hours? I don't think so, because clearly they are still the same levels on the 1 hour. So me, I'm going to the 15 minute now. On the 15 minute, I want to look for an entry. Like, okay, the market is on a key level. Let me mark this level with a, this level needs to be marked like this. I don't just like the colors of this thing. What color this is? Give me a pure white or no color even. Good. Always make sure to set up your always make sure to set up your chart the way it suits you, the way you like to see it. Your chart has to be looking neat and nice. Voila. This is better. Okay, so this is my key level I'm looking at right here now, right? So now on this 15 minutes, I want to analyze the 15 minute and see what actually we have. So on the 15 minute, I want to still draw my small trend line. Now from this key point, this key trend line that we mark on the 4 hours, right? I want to mark from this key point and go up like this. You see that? Always give extra allowance. You see, I've not marked and come and reach here, right? I give extra allowance. Okay, now what do we have here? You can tell me the name of this pattern we have here. You can tell me the name of the pattern we have here. Let me see. Anybody? Anybody? Tell me the name of the pattern we have here. So right here, what we have is double top. Nope. Look at this. Okay, let me make it easier for you people. Let me draw this here again. Look at this. This is what I want you to look at. Which pattern do we have there? Mm, 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 mm. Um, I see inverted triangle. As an ascending triangle, ascending triangle. It's an ascending triangle. This right here is an ascending triangle. It's pushing up. It's triangle pushing up. So now when we have a pattern like an ascending triangle, ascending is pushing to the upside. So the main trend first of all is an uptrend, right? The main trend is an uptrend. Now, aside from the main trend being an uptrend, you're going to see that the market is respecting the resistance level. This is a horizontal resistance level, right? But down here, it's not respecting like a support level, but rather is respecting a trend line that is pushing up. So it's an ascending triangle. Now, when we have an ascending triangle like this, what is the possible move when we have an ascending triangle? This is our possible move right here. That's the possible move we have right there. You see that for gold. That's our clear analysis for gold. Do we see that? Now, what is needed for you to do? Because yes, this is a clear potential move for gold, but you analyzing it, would that make you money? No. You will need to place a trade before money is being made. So what do you do? Are we placing the trade now? Are we waiting? Are we placing the trade now or are we waiting? I always say this, when there's a key level, allow the key level to break. Right? Yes, the market is probably going to buy. Gold is probably going to buy and continue going up. In short, gold is going to reach 6,000. But before reaching that 6,000, are you sure it's going to break this solid level we have here? Are we sure it's going to break this solid level to just continue to 6,000? We don't want to assume that it's going to break. No. We want to wait for it to break. Exactly, Victor. You wait for it to break. You don't assume it's going to break. Then you place the trade. You want to come back, it has sell and gone down. So you want to wait for it to break. Possibly, not just break and retest. But now for the break, we have two options. When it breaks, we can place our trade immediately it breaks, and the 1 hour candlestick close above that key level. Pay attention to this and write it down. When it breaks and the 1 hour candlestick close above that level. But if the 1 hour candlestick does not close above this level, if the 1 hour candlestick does not break and close above this level, that break is not yet valid. It only breaks, you only confirm the breakout when a 1 hour candlestick has closed above the breakout, be it support, be it resistance, be it a trend line. As long as there is a break, you're only going to confirm that, okay, yes, this thing has break only if the 1 hour candle has closed above or below that break of structure. The 1 hour candle have not closed, it can break and end up being a fake breakout and come back down. That's why I said for candlestick confirmations, I prefer the 1 hour because it's more solid. On the lower time frame, 15 minute, 5 minute, you will see you break and go up. The next candlestick will form, it break and come back down, right? So once it breaks, the 1 hour candlestick, once the 1 hour candlestick breaks and close above, then we are good to go at that point. So for gold right now, we have to wait for this breakout. And why are we waiting for this breakout? Some people are going to be selling gold now. And they have a valid reason of selling gold. They are selling gold because they feel like gold is on a resistance level, which is true. Gold is on a resistance level. But look at it from a clear point of view. You're going to see that gold being on a resistance level, there's also a trend line below. So you cannot be selling when the market is reaching an enemy. That trend line is an enemy to that sell position. That trend line is going to stop that sell from going down. So it's an enemy. If you also look at it from the upside now, that you say you want to buy, there is a resistance level there. There's a resistance level there. Right? So at that point, we have to wait for a breakout. And a breakout is probably going to happen to the upside because we have an ascending triangle. So why is it a ascending triangle? We have the horizontal resistance, right? We have the horizontal resistance, which I mark with a red level. You see the red? I marked it here. So that's the horizontal resistance, resisting the market from going up. Then you see that price is moving higher highs, higher lows, higher highs, higher lows, right? So it is rising, supported by an upward trend line, a rising trend line. If it was this way, let's just say we had like a support level down, right? Then we had like the market pushing to the downside like this. Then this is going to be, so this is an ascending triangle. This is going to be a descending triangle. Like this other part, the side of the side where the market is respecting the downside is respecting support. Then on the upside is respecting a trend line. So this now is going to be a descending triangle. You see that? But this one right here is an ascending triangle. This is an ascending triangle. You see that? So for gold now, we don't have an entry on gold. We have to be patient and wait for a breakout. You have to be patient and wait for a breakout. The ascending triangle is a bullish continuation pattern. That's a bullish continuation pattern. So being professional and not trying to catch some little here and there pips. You have to wait for that, for the market to properly break that structure. Once it properly breaks that structure, then we are good to go. And based on my experience, this breakout might happen during the New York session because the New York session is going to come in with a lot of volatility, right? New York session is going to come in with a lot of volatility. So when New York session come in, then we can have a proper entry at that point. Now we go to analyzing Euro USD, right? Euro USD. Euro USD was the next on our list. So we have Euro USD right there. The way the market has been gapping, this thing, Trump is the issue, is the one causing all of these gaps in the market. He does not rest even on the weekends when the market are closed. He's only talking. He's only talking. He's only making decisions, and those decisions now cause the market to gap when the market opens. Guys, let me give you people one hack. Yeah, I don't know if you guys use AI, but if you're not using AI, then you are missing out. You need to start using ChatGPT. Because if you're using ChatGPT, you have the premium. You can just snap your chart like this. Snap your chart. For example, this Euro USD. Let me go to my chart. Life is becoming so easy, and that's one of this is one of the things that we are going to be having where we launch our first app under the company here in Dubai. We're going to have like AI being able to analyze the market for you, right? Okay, for example, this is a chart on Euro USD. Let me just send this chart to chat and ask chat what he thinks about this market, Euro USD. Let me go there. I'll just ask, what do you think about this Euro USD chart for today? You see, you're going to analyze everything and give me results. You get it helps you one step. It gives you one step, it puts you one step ahead, right? You basically look into it. Okay, this is the answer. All right, let's break down this chart clearly. That the chart has snap and sent. Let's break down this chart clearly. Uh, my read on this Euro USD chart for today. Market structure. After a strong bullish, price has clearly moved into consolidation. Okay, after a strong bullish. Okay, after a strong buy, price has moved into consolidation. Right. We are seeing. We are seeing a range distribution phase, not a trending market right now. Okay, a range distribution phase, not a trending market. Clearly, you can see that the market is actually consolidating. Highs are getting weaker, lows are holding. Classic range bounce behavior. So the highs are getting weaker, right? While the highs are getting weaker while the lows are holding. So the highs are getting weaker, like okay, it was pushing on the higher time on the uptrend, but the highs are getting weaker. Buyers are getting weaker in the market, right? Okay, what pattern this resembles? This is more of a range rectangle after an impulse move. Slightly bearish bias intraday trade because price failed to continue making higher highs, and we just saw a sell off from the range high. The price failed to continue making higher high. Now, how do we identify the movement on the chart, right? The trend of the market. When the market is giving us higher highs, higher lows, higher highs, higher lows. But now, when it comes to give us higher highs, now it cannot give us higher highs again. It failed to give another higher high, right? So after this previous high, the market has failed to give us another higher high. And that's a problem, right? That's the problem. The market has failed to give us another higher high. So what do we do? The market fails to give us another higher highs. What do we do? It shows that the buyers are failing already, right? That's a clear sign that the buyers are failing. There's no strength again for the market to continue going up. Now the market is ranging. So within this range, what do we do? It's not good to trade during ranging markets. You have to wait for the market to break out of that range. But yeah, let's go back. Let me first of all set up this chart. Let me set up this chart. I like my candlesticks red and green as it is. I don't like any extra formalities. Normally, when it comes to trading, the buy candles are always green and the sell candles are always red. But there are some people that, you see girls putting their red as pink and putting their different colors, which is very okay. You just have to decide the one that works for you. Okay, this works for me. Okay, so right now, Euro USD on the 1 hour time frame. Let me see what we have here. First of all, I want us to mark our key levels. Always remember, when you come into any new chart, you go at least on the 4 hours. I always recommend if you start on the daily time frame, because I, as a day trader, I want to see what is happening on the daily time frame. I want to see the candlestick we have on the daily time frame. So right here for Euro USD today, we have a bearish candle for Euro USD today. So Euro USD is bearish for today. And you can clearly see that candlestick had a rejection on the upside. So we might be looking at Euro USD to sell today. That's the first mentality. When you come on the daily time frame, you look at the candlestick for the day. You want to, okay, maybe I can trade based off that candlestick. Like, okay, today is bearish, so I can look for some sell opportunities today. Because this candle already being bearish, it'll be difficult for it to actually come back up, back to entry, then continue going up. For those who understand how candlestick forms, the candlestick has already formed. Let me zoom that out again very well. This is the daily candlestick for Euro USD. And this daily candlestick for Euro USD, let me see. Now, you see this candlestick right here? That's the daily candlestick for Euro USD. You see this position here? This position like this. You see that? That place I've marked? That was where the market opened. And when the market opened in that position, this long wick here, now I'm explaining candlestick formation. This long wick you see here like this, that wick means that the market had come up, right? The market had come up to this level, then sellers were able to push the market back down. It came back now. This is the open price of that candlestick. It bypassed the open price. When it bypass the open price and go back down now, the candlestick now becomes red. If it opens like this, like the way it opened here like this, then go up, the candle is going to be blue, right? The candle is going to be green, a buy candle. But now, if it comes back, like what it did, it came back to the entry, then sell to the downside. Now you see that the candle is red, right? That is a bearish candlestick, and we're on the daily time frame where this candle is going to close after 24 hours. So it opened midnight and it's going to close by midnight. So that's why the candlestick is very powerful. That's why you can just looking at just the candlestick alone, you can decide what you're going to do on the lower time frame. So in conclusion, that is why it is important to always look at the higher time frame, daily time frame. Once you have looked at that, most of the times I'll pay attention to the daily time frame or mostly pay attention to the candlestick. But you can still decide to mark key levels. You can either decide now to just go now to the 4 hours time frame now and start marking your key levels from there. So on the 4 hours time frame now, I want to mark key levels. And what are the key levels I want to mark? I want to draw my trend lines. I want to mark key levels of support and resistance. So I'm on the 4 hours now. On the 4 hours now, I want to mark my key levels. I want to mark my key levels on the 4 hours. I'm going to start with my key support and resistance levels. So I'll mark this lowest level down here. I see the market rejected. I'll mark this level here. I see the market rejected this level. I'm going to mark this level. Which other level again? Look at levels that the market has expected. You mark. Remember, we are trading price action, and price action is simply looking at what price has done in the past. Price action, price. What price has done in the past. My mic is not clear. It's because this mic is slow. That's why I was using the mic. Okay, my mic has connected now. My mic was low, so I wasn't using the mic. Okay, so like I was saying, right? You mark key levels. So this level has been marked, right? This level here has been marked, and let's see which other level we have to mark. Mark this level here, right? Mark this level here. Then come up. I hope you guys can hear me clearly now. Just to make sure my mic I'm using. Okay. Yeah. Okay. So I've marked these key levels, right? Look at the key levels. I've marked the key levels clearly. Levels that the market has expected in the past. But now remember we're on the 4 hours. So let's go now to the 1 hour where we're going to look for entries between the 1 hour to the 15 minute. So when we get to the 1 hour, 15 minute, we are looking around present market price. Present market price, this is present market price moving here. So we are looking around present market price because that's where we are going to get entry. Right? That's where we are going to get entry. So now, on this entry right now, if you're going to get entry, right? If you're going to get an entry around this point, what do we have to do? Candlesticks. What are the candlesticks that are forming around this level? Clearly, chart had already told us that the market is ranging. You can see that the market is ranging. It's just forming small candlesticks here and there, forming small candlesticks, right? So there's no volatility into the market. There's no volatility in the market. And probably because of the time we are having this live session also, I wish I could be on this live till New York session, right? I wish I could be on this live till New York session so that we actually get to have an entry, because this trade right now is just basically analyzing. London session has become so slow. London session has become so slow. It does not really give you money. You remember, we need volatility to make money. Imagine you placing a trade now on this Euro USD, seeing here. You place a trade and it's making this thing. Look at the time here. The time we have here is 16. So for like how many hours? Seeing 16, 17, 18, 19, 20, 21, 22, 23, 24. For more than like 4 hours or 5 hours, the market has been consolidating. There's no money. So when you place a trade, it's just going to be consolidating. You're not going to make any money. That's why we need volatility. That's why I don't even look at chart. I don't pay attention to the chart that much during London session again. Even though there are times on gold You can have, on average, we can have a range. Gold always give us a range of 100 to 200 pips during London session. It always give us that range between 100 to 200 pips. That's because gold is too volatile. But most of the currency pairs will not really give you even 50 pips. You don't even see 50 pips. But on other volatile instruments or pairs like gold, metals, BTC, you can see a range of 100 to 200 pips. Like this morning, gold move, I think like 100 pips for a buy, then came back down, passed and went down. Those who placed that trade, those who had that buy trade on gold, probably the trade should have hit their stop loss. Because it went up 100 pips, then came back down straight and went down. Maybe down again, maybe below again, maybe like 50 to 70 pips below. After it had gone up. But you see that when it's New York session, once it goes up, it continues going up. 200 pips, 300 pips, 400, even 500. That days gold is going to give you 1,000 pips in a day. That's why I love trading gold, because you always give you opportunities every day. But it's also very volatile and very risky. So when you are on pairs like gold, you need to be aware of the fact that it's so volatile, it could give you opportunities, and as well as it could take you out within the shortest period of time. And the time of the day you're also trading. You need to understand that most of the time during the London session like this is mostly for analysis. Oh, except scalpers. Yes, scalpers can make some money. Those who are trading on 1 minute and 5 minutes, they can make some money. But if you're a scalper and you want to make some money, then you should be using big lot sizes. You cannot be a scalper and you're using a small lot size. You're wasting your time. You cannot be aiming for 10 pips, 20 pips, and you're using small lot size. You're wasting your time. Well, that depends on your account size, right? But looking at it from a systematic point of view, if you have, let's say, $100, and you are looking at risking $5 or $10 to gain, maybe, if you are risking $5, you are aiming to gain maybe $10, $15. That's maybe 1:2, 1:3 risk to reward ratio. If you are risking $10, you are aiming to gain $20, $30. If you are risking $10 and you are aiming to gain $20, that's a 1:2 risk to reward ratio. If you're having $10 and you're aiming $30, that's a 1:3 risk to reward ratio, which is good, right? But if you come to this kind of trades, like for example, this Euro USD now, and you tell me that you are placing a trade here. Let's take, for example, I want to place a sell trade, right? Let's take, for example, I want to place a sell trade here. That's the example, right? For example, I want to place a sell trade at this point. Now, me wanting to place a sell trade here, I need to put my stop loss on a normal as a trader. You know that you cannot come and put your stop loss in between the candlesticks like this. You want to put your stop loss above that key level. That's why there's even no entry, because at least the entry should be up here. So that at least if the entry is up here, you have a good risk to reward ratio. Your stop loss is above that key level. Then your take profit should be down on the previous low. This is the previous low that we mark. We mark this line, which means that it's a key level. Even with this, what's the risk to reward ratio? It's still not up to 1:2, which is not proper. So you see that, okay, maybe you want to drag your stop loss down a little bit because, okay, now we have a 1:2, 2.08 risk to reward ratio, right? So now, at this point, you're going to see that there's no volatility in the market. But if you want to place a trade, your stop loss is going to be far up there. And if your stop loss is far up there, you will not have a proper take profit. And if you don't have a proper take profit, it's not clear on my screen, probably a network. If you don't have a proper take profit, then you don't have a proper risk to reward ratio. And if you don't have a proper risk to reward ratio, that is where failure starts. That's where failure starts, because one principle is lacking. One principle is lacking. It's as easy as that. You get. So at this point, Euro USD, there's no entry. We have to wait. And probably we're going to get a good entry during London session. Or maybe wait for it to retest like what I've drawn here. Maybe just wait for it to maybe come back up to, at least come up to a level maybe around here. So at least you know, okay, you can push to the downside. So I know at least you can push to the downside. But for now, there's no proper entry. But take note of this key level here. Take note of this key level. Right? Take note of that key level there. And probably this entry should even come up. You don't want to rush to place the trade. Wait for the trade to come to you. Yeah, and we have it there like that. It's not going to be bad. If you have an entry there on Euro USD, it's not going to be a bad one. But you have to be patient. You have to wait. The market needs you to be patient. You cannot rush with the market. If you rush with the market, you will see anyhow. You rush with the market, by the end of the day, you must have hit stop loss. So you have to be very patient. Which other pair should we analyze? Those are the academy. Which pair should we analyze? Which pair do you guys want us to analyze? Guys, if you are watching and you have not subscribed, please just click the subscribe button on YouTube. And also go follow me on Kick. Those are new streaming platforms. I've never used them before. So we are live on YouTube. We are live on Facebook. We are live on Kick, Twitch, Instagram, and we are live on Kick. So you can go follow us on all of those platforms and join the live. Euro US is approaching, it's pushing up. So probably when you get up there, let me look at my goal again. This is my interest point. And go to is looking proper. Let's see what happens. Let's see what happens on gold. Okay, we are going to analyze BTC. We will analyze BTC and BTC and which pair again? GBP JPY. I see Victor saying GBP JPY. So we'll analyze that also. Okay, let's look at BTC. Let's look at BTC. Trust me, BTC is going to push up. BTC is going to go up. With Trump loving BTC and encouraging crypto and claiming he has how many billion in crypto, it's only a matter of time BTC is going to go up. So when it's going down, we look at it like an opportunity. When BTC is going down now, we look at it like an opportunity. Let me go to the daily time frame. The daily time frame, BTC has been going down. It's going to pull up. It's going to go up. What I'm going to do is that I'm going to just deposit maybe like $2,000 on a BTC on a different account. Then I just place a trade on BTC. Then I just allow it. But yeah, let's look at BTC and we look at GBP JPY. Someone made mention of trading GBP JPY. Okay, looking at BTC, this is a daily time frame. Look at the daily time frame. The daily time frame on BTC. Look at the daily time frame on BTC. You see that it has been going down, right? BTC has been pushing down. Guys, if you're on TikTok, let's double tap the live. Let's double tap the live on TikTok. Okay. Now let's analyze BTC. On the daily time frame, BTC is on a downtrend. Even if you want to draw a trend line, always make sure this is my favorite tool I use in trading is the trend line. This is my favorite tool, trend line. So look here, daily time frame, I'm drawing the trend line. Can you guys see that trend line? I take the trend line from up here, down here, respect, down here, respect, down here, right? Respect, and goes down. Trend line is very powerful. Now, what does this tell you? BTC, it's time for BTC to go up. It's time for BTC to go up. Now, if I come down here, I want to draw a clear support level down here. This alone, proper price action. This is proper price action. This is the daily time frame. This is the daily time frame. You look at it clearly, you're going to see that BTC was on a downtrend, a good downtrend. I think this is the time I need to deposit them at 1,000 or 2,000 and just place my trade on BTC and allow. Right? Look at, it was on a downtrend. If you have some money, these people that they go and invest their BTC, take money and put in crypto, and you don't even know what you're doing. This is a proper time for you to buy your BTC. Now you're not buying that thing you go and buy and hold, right? What you're doing is you are buying, then you have your stop loss below this zone. That makes a difference between you who actually understands what you are doing and somebody who is probably just buying BTC because he heard that, okay, buy BTC, hold on. You go up, you make money. If you go down, you lost all your money. Now with this one now, you just need to fund, go to your Exness account, get into your Exness account, create a different MT5 account. That's when you log into your Exness, you create a different MT5 account, right? Go to your personal area. You go to your personal area, create a different MT5 account, just name it BTC or BTC investment. Just place your BTC trade. If you deposit maybe like $100, you are ready to reach that $100, or maybe if you are not ready to reach that $100, you calculate your stop loss, put your stop loss to maybe reach the amount you want to reach, maybe $50, maybe $30, right? Then you allow it to flow. Now let me show you what I'm saying. Maybe it's time for BTC to start buying. We're on the daily time frame. On this daily time frame, see that BTC has been pushing down, right? From this double top here, or let's say from this resistance level, you respected 1, 2, then it pushed down, came back up, rejected, we meet the trend line. What happens? It goes down, come back, meet the trend line. What happens? It continues down. Come back, meet the trend line again. What happens? It continues down. Now we consolidate. We have consolidation. On this consolidation now, what is happening? At this point, you see that BTC is actually rejecting this zone 1, 2, 3. And aside from BTC rejecting that resistance level, which shows that, okay, it's time for us to maybe start looking at buy opportunities, you're also going to see that this trend line has been broken. This trend line has been broken. This is the trend line here. It breaks the trend line here. Go up, come back down to retest. Aside from that again, if you look at this trend line very well, you look at the chart. If you are at the academy, those are the academy, probably maybe you have looked at trend line, or maybe you have not looked at trend line again. Maybe I've not looked at trend line yet. How do we understand the market movement? Market movement is either higher heights, higher lows, higher heights, higher lows, higher heights, higher lows. So if you see the market moving like this, right? When the market is moving like this, it means that the market is on an uptrend. You get? It means that the market is on an uptrend. It gives you higher high, higher low. So it goes up higher, then come back a little bit low. Higher, come back a little bit low. So once it goes up, it comes back. It goes up now and break the previous high. Right? It goes up, break previous high. This is the previous high here. It comes down, previous low. It goes up, bypass this previous high, and give us a new high. That's a sign that the market is pushing to the upside more. That's a sign that the market is on an uptrend. Now let's look at for the case of this BTC, right? For the case of this BTC, this is what is happening instead. For the case of BTC, it is giving us from this level, it came down, gave us lower low, lower high, lower low, lower high. You see that? It continues from there. Lower low, lower high. Then what happened? Instead of going down to give us another lower low to show that, okay, I am still going downward, what happened? It came down now. Instead of giving us a lower low, it gave us a lower high. Right? This is a lower high, not a lower low. It's not give us a lower low. Unlike here, this one was a lower low. That's a low that is lower than the previous low. That's a lower low, right? Now it left from up here, came down, gave us a new lower low. From lower low, it came up. It did not go back to give us a new higher high. It instead gave us from lower low to a lower high, which therefore means that it is not pushing upward to break this previous high to give us a new higher high, but it is instead pushing, give us a lower high, then come down and instead give us a lower low, which therefore means that the energy is pushing more to the downside than to the upside. That was why we had this clear downtrend for BTC. Bitcoin was going down. Now, what happens? From this lower high, it comes down and gives us a lower low. Lower low, lower high. From lower high now, okay, we are expecting maybe a lower low to continue downward, but now it does not give us a lower low, it gives us a lower high. Then the trend line is broken. So it's a clear sign that, okay, this downtrend has actually ended. Then we have this level down here also, right? So now we are looking at this. Then probably a continual push to the upside. But now all of this analysis, what we just did, is on the daily time frame. It's on the daily time frame. So I'm not going to conclude here for now. Remember, we're not getting entries here. But if you want to swing if you want to swing long term, like I've said, swinging long term, you have to look at the higher time frames, right? If you want to swing long term, it's good you look at the higher time frames. So if you want to trade BTC long term, these are those who want to buy BTC and hold. For example, I myself, I'm going to deposit $1,000, and that $1,000 I'm going to place a trade with. If I place a trade with lot size 0.1, yeah, I place a trade with lot size 0.1, right? Then I'll just allow it to move. Because I know if I place a trade with lot size 0.1, BTC is on 87,922 now. So if I place a trade there with lot size 0.1, one pip movement is $1. I know that BTC is going to give me a lot of money, right? It's going to push back up and it's going to give me a whole lot of money, right? So I'm going to place that trade, or I could decide, okay, maybe I'll use lot size 0.2, right? That just give myself allowance. So in case you want to also go against me. You get, if I use $1,000, if I use 0.1, another, okay, if you have to go against me, you have to go against me 1,000 pips before it blows my account, which is reasonable. You get, but trust me, BTC is going to move fast. Trust me. If you have some money, remember there's a risk involved. If you have some money, place your position on BTC. This is a clear analysis for swing trade. We have to go to the lower time frame and see what the lower time frame has. But for now, this is for swing trading. Those who want to swing BTC. Clearly, the downtrend has ended. The trend line has been broken. A key resistance level, right? The lower lows, lower highs, lower lows, lower highs has ended, and now it has given us higher highs, higher lows coming to retest. So you can place your trade now and hold. Create a new MetaTrader 5 account. Don't get into your XNS account. Create a new MetaTrader 5 account, right? When you create a new MetaTrader 5 account, deposit and use small lot size. Don't go use a big lot size. Okay, maybe you can consolidate and maybe you reject a little bit, then take you out if you want to buy. But BTC is going to go back to the moon. If you look at fundamentals also, fundamentals is in favor of BTC. Just last week, Trump was talking about reminding us his promise to make US a central ground for crypto. And just the other day on the news, I saw he has like how many billion in crypto, right? So, I mean, you want to go with the big boys, you want to trade with the big boys. So this is a clear, rather than you going to maybe any of these wallets to buy crypto and hold, it's better to actually come and actually place your trade here and even put your stop loss, because if you want to place this trade here, you can put your stop loss below. In case you break this level, then you are out. So you can even come and put your stop loss below, right? So place this trade, lock out of that account, and just allow it to run, right? Just allow it to run for the longest time. It's not going to be a trade you're going to close today or close tomorrow. This is for long swing trade. Now let's continue analyzing now and go now to the lower time frames. So on the lower time frames now, from the daily time frame, I'm going to go to the 4 hours. So on the 4 hours now, we are now looking for, okay, what are the options we have maybe to place a trade, maybe today, maybe to day trade. We are now looking for a day trade opportunity, right? So looking for day trade opportunity, let's look at what BTC has on the 4 hours time frame. So on the 4 hours time frame, we have consolidations. Let's mark key levels first. Let's mark key levels first. Remember, key levels are levels the market has expected in the past, right? We are trading price action. That's the strategy we use, price action. What price has done in the past to predict what price will do in the future. Key levels the market has respected in the past. There was a reason why the market respected that level in the past, and it's also going to respect that level again in the future. It's as easy as that. If I respected this level in the past, I will probably come and reject that level again, right? I'll probably come and reject that level again. So I'll mark these key levels. Let me zoom out and see if we have another key level. This key level here is valid, rejected on the upside, break and retest, rejected on the downside. Yeah, that's perfect. Now let's see if we have another key level like here. Yeah, let's just see. We have a key level there. well, it's still in this zone, right? This zone we mark on the higher time frame. So probably the market might even come down, maybe reject, or even get to this level, right? But now let's go to the 1 hour time frame where we want to look at our entries. And on the 1 hour time frame, like I always say, we are looking at where the market price is, present market price. So on the 1 hour time frame now, we are looking at present market price. So looking at present market price now, I want to see if I can actually have something like this here. And let's see if we can have a key level around here. Why did the market reject this level? We mark. You see that the market rejected this level here for a reason. Now let's look into it. You just simply go behind. You go behind, you see that, okay, the market also rejected this same level here before, came down, then came up, rejected that same level, right? Now we go again behind. This same level the market respected here, 1, respected to the upside 2, then before breaking to come and retest. You see, price action? Price action is what you need to become profitable in trading. Just look at what price has done in the past. You mark those key levels, you wait for price to come and reject that levels again in the future. You see that? So I was just marking this level here. I did not see this level in the higher time frame. But coming down here, I'm marking this level here because I said that it rejected here. When you mark this level here, then you follow behind, you're going to see that somehow it has respected behind. So now that point is valid. So now what do we have here? What do we have here? Guys, what do we have here? Which pattern is this? Which pattern is this? If people still get this one wrong, then I'm going to be very disappointed. Which pattern is that? If you even snap it and show chart, chart is going to tell you the pattern. But which pattern is that? Isn't it the same pattern we saw on gold? It's the same pattern we saw on gold. It's an ascending triangle. That's an ascending triangle. Okay, now, why do we have an ascending triangle on BTC and also have an ascending triangle on gold? What is there in common? What is there in common? Let me give you guys deep knowledge. Why do we have an ascending triangle, almost the same pattern on BTC and same pattern on gold? So clearly the market comes down, respect this trend line, goes up, come down, respect this trend line again, goes up, come down, respect. That's an ascending triangle. Almost the same thing we had for gold. This is gold right here. The same thing we had for gold, right? The same thing we have for gold. The market come down, respect, goes up. Come down, respect, goes up. So why are they having similar patterns? Can somebody tell me? Why are they having similar patterns? Okay, maybe I should do it this way. Where is this? Okay, let me say we have BTC USD and XAU USD. What do these pairs have in common? What do these pairs have in common? What do these pairs have in common? BTC USD and XAU USD. Nobody to answer. Let me put it like this. Okay. Now, their code currency is USD. Their code currency is USD. Which therefore means that if anything happens to USD and USD is going down, what is going to happen? BTC will be going up, gold will be going up. Now, bringing fundamentals to technical analysis. Bringing in fundamentals to technical analysis. What is happening? Yeah, you cannot be a trader and you're not following news. You cannot be a trader and you don't understand what is happening in the world. There's a lot of instability. A whole lot of instability. Especially with the US. Trump is causing a lot of wahala. And now instability is bringing fear to US. And once there's fear in the US, the currency automatically lost its strength. And if USD is going down, based on our Forex price code lessons, if you don't have that lessons, make sure you get the course. If you don't have those lessons, make sure you go get the course. Click the link on my bio, get access to the course. It's there completely for free. It's lesson 4, Forex price code. When if the code currency is going down, the base currency is going up. And looking at our analysis here, the ascending triangles are giving us confirmations for a continuous upward bullish movement for these two pairs, BTC USD and XAU USD. Which therefore means that if USD is going to be going down, then these two currencies are going to be going up. So if USD will be going down, then these two currencies are going to be going up. And because the chart move based off the base currency, these pairs are going to be buying. Because the chart move based off the base currency, these pairs are going to be buying. So now, the ascending triangles on both BTC and gold, they now make sense. It aligns with fundamentals. Is that clear? It aligns with fundamentals. We just have to wait for New York session to come in with volatility. Then we see what the market is going to do. But for BTC and for gold, long term, trust me, BTC is going to push back up to 100,000 and even more. Gold is going up to 6,000. Gold is going up to 6,000. So you don't have to look back for your entry. You just have to wait for your entry. Because gold has to go up to 6,000, but it does not mean that maybe it cannot go down again a little bit. Right? For BTC, I already give you guys BTC. For those who want to trade long term with BTC, I already give you guys entry on BTC. Place your trade and you allow it long term. I myself, I'm going to place that trade on BTC. I'm going to place that trade on BTC. I'm going to just create a different account and, place the trade. And we'll see how it goes. So I think our analysis on BTC is proper, right? Which other pair should we trade it? Should we analyze again? Somebody said GBP, JPY. Okay, let's at least analyze a pair that does not have USD. let's analyze a pair that does not have USD at least. So for pair that don't have USD, let me check if the live on Instagram is still active. Okay. Live on Instagram is still active. I like it. Love that. Okay, so for GBP JPY, I hardly trade that pair. Let me look for it. GJ. The GBP JPY has a news. It looks like there's a news event. There's a news event. There's a news. Probably there's a news event that is pushing this. Oh, let me see. That's some good move right there. Okay, so let's analyze GP JPY. I see it's having some massive move as we speak. Let me just go quick to the 4 hours time frame and see what is there. On the 4 hours time frame, that's been on an uptrend. I'm just going to draw my trend line to make sure the trend is valid. So on an uptrend, the uptrend has ended actually. The uptrend has ended and the beginning of a downtrend. So you see it was on an uptrend, right? But the uptrend has break, then it has come back to test the beginning of a downtrend. Marking key levels now. Marking key levels, you're just basically marking levels that the market has respected in the past. Trading can be very sweet if you keep it easier. No complications. Don't complicate yourself. Always try to keep trading easy. And mark there. Okay, let's go to the 1 hour time frame, which is one of my most interesting time frames because that's where I get my candlestick confirmations. So on the 1 hour time frame now, the market is actually selling massively. So let me see. Let's put it on the key level down. And let's see where this market rejected, right? This level like this. Let's mark that level. Why did the market reject there? We'll mark that level, then we'll go down now and check. Why did the market reject this level? So when you mark it now, you go behind. You're going to see that even here, there was some consolidation before it break. You're going to see that even here, it rejected from the upside, right? It rejected from the upside, went up. Do we know that it was ever going to come and reject here? No. So once it has rejected here, if you had marked this key level here, when it comes like this, you know that, okay, you have an entry here. You have taken this sell. But nevertheless, let's see if we have another key level. That's all. You don't need to complicate this thing. That's all. Once you do that, look at your stop loss should be above the key level. Your take profit down below the previous low. Your risk to raw ratio 1:2 and above, or 1:3, and you place your trade. Then you relax and sit back and just watch what happens. But anyways, let's look at what's the time? Ready to 2. Okay, let's look at what is happening here. Let's go to the 15 minutes. Before going to the 15 minutes, I want to make sure that I've marked the major key levels, right? Okay, 15 minutes now. I like the volatility I'm seeing there. Volatility means money. If you know what you're doing, volatility is going to give you money. But if you don't know how you're doing, the volatility could be against you and you still lost money quickly. So basically, this market has just break this level and is pushing downward. Always make sure to draw a small trend line because the trends matter. On the 15 minute now, I want to draw like this. That's been going up. That's been going up. then break. Now on the 1 hour time frame, wow, that was a massive push. Let me just see, probably there's a news event because that move is massive. Yeah, there's a news event. There's a news event. What happened to my London session? The market actually running about $3 trillion now. Okay, well, this is already a distraction on this GBP JPY. That's already a distraction. So right there now, let me see Euro JPY. Oh, let me see USD JPY. USD JPY. Okay, let's see Euro JPY here. If it was a news event on JPY, it's going to affect Euro JPY also. Let's look at Euro. Yeah, Euro JPY. Okay, you see that? You see USD JPY. Oh, sorry, I'm going to remove the USD JPY even. You see USD JPY? You see the movement? You see Euro JPY? You see the same movement, right? So there was a news event. There was a news event on JPY. There was a news event on JPY. That's my alarm to drink water. Always make sure you drink water. If you don't set alarms like that, you might go the whole day without drinking water. And it's not healthy. So I've teach you one hack. You can set your alarm a particular time in the day. When you drink water, it just gives you that reminder. Okay, so we see that there's a news event on JPY. Because the news event is on JPY because Euro JPY, they have JPY as code currency. USD JPY has JPY as code currency, right? So if these pairs are going down, it means the news was positive for JPY. Are we understanding? If Euro JPY is selling, you see that Euro JPY is selling, you see the long spike, the long sell. USD JPY also, we see the long spike, the long sell, right? It therefore means that these two pairs have JPY in common as the code currency. And if they are all selling at this time, the same movement, it means that JPY was buying and therefore pushing them down, the Forex price code. There are some people that are going to be confused. If you are confused at this point, that's because you don't understand what the Forex price code is all about. So if you don't understand what the Forex price code is all about, go to lesson 4 of the course. The online course is free. For those at the academy, this should be 1 + 1 for you. You should have already mastered this already. So you need to understand the Forex price code. Please send me Momo. Please send me Momo. Okay. So you see that you need to understand trading properly. Those who have just small knowledge up and down, you are just here and there, you just pick small things. You will not understand what happened, or you don't understand what I just explained now. Euro, JPY, USD, JPY, they are all selling this morning. Why are they all selling this morning? There's a particular reason why they are all selling this morning. There's a news event on JPY. And they are both moving in the same direction. So why are they moving in the same direction when they have their base currencies are different? They are moving in the same direction because the news is on JPY and the news has favored JPY. That is why they are both selling. If the quote currency is buying, the base currency will sell and the chart move based off the base currency. If the base currency is buying, then the chart is going to buy because the chart moves based off the base currency normally. But since JPY is the quote currency and the chart moves based off the base currency instead, if JPY is buying, the base currency will be selling and the base currency is what moves the chart. So that's why we have USD JPY selling and Euro JPY selling. So if you don't understand that, just go through the course, get access to the course, go through, and help yourself. You cannot want to make money in trading where you don't know things like this. Okay, so we have analyzed gold. Let me just confirm. Okay, gold has almost break. Wow. That's why I like gold does not waste time with this thing. Gold does not waste time. Gold does not waste time. Gold has almost break, but if you go and check the other pairs, they will still be there consolidating and still turning around. Gold has almost break, but has not break completely. New York session, gold is going to break and push up. Gold is going to continue buying. Gold is going to continue buying. New York session, I'm going to come back to this live. New York session, we are going to come back on live. Or probably those who are on TikTok. For now, I need to look for something to eat. And I get something to eat, probably go out and relax a little bit. But I'll be back on the chart like between 5:30. And, you know, some money has to be made. So that is good. And we have looked at BTC. For BTC, I'm going to deposit. For BTC, I'm just going to come to my account here now and create new account. That's what you should do. Just come and open the new account, right? Once you open a new account, standard, they continue. That's go to your existing trading account, right? You go to your existing trading account. If you don't have a trading account here, click the link down below to create a trading account. If you're on TikTok, click the link on my bio. Create your trading account. Once that is done, verify. And by the way, if you have any issues with verification, you can contact our support team, +237 671 20 7313. +237 671 20 7313. You can contact our support team. We are going to help you out with the the verification. So once that is done, for those who want to trade the BTC long term, deposit any small money you have and use a small lot size. Open the position and keep and hold. Personally, I'm going to be depositing maybe 1,000, between 1,000 to 2,000. Well, that's normally the amount I risk on per trade on the normal day. So I just want to take it like one trade, but put it in a different account. Then, because you can create as many accounts as possible under your back office, right? So once you create that is done, then you can place your trade on BTC and allow it to ride. It's going to be a long journey, but yeah, allow it to ride. With that being said, for those who were asking of the other pairs, Euro USD, this is Euro USD, we looked at sell. Okay, look at Euro USD. We have made that entry. Those who were asking, this is it. We have made this entry on Euro USD. You see that? It came directly to that level and it's selling already. This is the disadvantage of trading many pairs. This is just a disadvantage. Because this was a clear trade here. We're waiting for it to come back to this level. But regardless, it might still come back again before it goes down. But if we were on this chart, we should have placed this trade. It's already moving already. And we had already analyzed it, right? So analyzing, yes, we want to analyze, you need to be focused. When you analyze, you need to wait for your entry. That's why trading too many pairs at times can be very confusing because you'll just be missing your entries. When we analyze this trade, this Euro USD was still down here. As we're focused analyzing the other pairs, look at, we missed out. We missed out. Anyways, you can always set price alert, right? If you're using the Xnest terminal, like what I'm using now. If you're even using the Xnest terminal, you just come to your personal area. When you come to your personal area, you just take trade, right? Just take trade. Where you take trade, on you take trade, it's going to take you to. On you take trade, it's going to take you to the Xnest terminal. Then you can trade from there. So you can set your alert. So if we had actually set an alert on this particular price, you should have notified us when the market got to that level. Okay, so that being said, we are just going to end the live here. I need to even charge my phones. We are going to end the live here, and I'll be back doing New York session for us to break down and see if some money can be made. And I'm going to end this live by letting you guys understand that the market has risk. Any decision you make in the market is risky, right? So risk what you're comfortable losing, apply proper risk management. Whatever I've done here, whatever I've told you here, showed you here, teach you here is no financial advice. It's for educational purpose, right? So you have to be guided. Thank you guys for joining the live. I'm still live on TikTok, by the way. But thank you guys for joining. Appreciate, and hopefully this clip, the lesson as a whole, is going to be uploaded on YouTube so you get to enjoy. Those who missed out, you can share the link to those who missed out, your friends who were not available, so that they can also have a taste of what happened or the knowledge that you gain.